Everyone's asking the same questions right now. Are HMOs still worth it in today's market? With rising interest rates, tighter regulations, and Article 4 zones popping up everywhere, I think it's a fair concern to have. I've spoken to landlords giving up their portfolios and others making more money than ever. The truth, HMOs can still be incredibly profitable, but only if you adapt. In this video, I will break down exactly what's changed and what still works, and how I am positioning my HMO portfolio to stay cash flow positive. So let's talk about what's changed. So with high interest rate period that we have at the moment, interest rates are obviously eating into the margins of your HMO profits. And that might look like maybe previously you're making £1,500 profit from your HMOs. You might now be looking at £1,200, £1,100 in profit from a single property, which some might argue that's still a great position to be in, right? And again, it's the benefit of having that HMO asset, because you are in an asset that has margins to allow you to be able to weather high interest rate periods like we are in now right now. We're also in a period whereby the bills have gone up on these HMOs. But again, as you can imagine, because we are landlords and we are providing accommodation where there's bills inclusive, we are obviously factoring this into the rents that are in the marketplace. And obviously this is a universal problem. So all landlords are doing this, and it's not like one landlord is being greedy and going out there and looking to trying to capitalize in the market. No, it's a necessity, right? We haven't got a choice. It's either we absorb that and even our profits drop even further down, or we look to balance things out by shifting some of that cost onto the tenant. And again, like I said, it's a universal problem that everyone understands is happening and people expect it to happen. And it's no different to anybody else. Also, what's happening in the marketplace of HMOs are some councils are becoming more strict with the requirement of needing to go through planning. So a lot of Article 4 direction. And for the people that don't know what Article 4 means, this refers to taking the permitted development rights away from property. So previously you had the permitted development rights. We have to take a house, it's use class C3, and convert that to a use class C4, which is basically a HMO, or small HMO to be more specific, sub 6 rooms, without going through planning. Some councils are now taking upon themselves to minimize the amount of HMOs in areas for whatever reason. And so that's now taking away the right through the form of Article 4 to stopping you from going into an area, buying a house and converting it straight into a HMO. So you have to kind of look at these areas and understand, is your area going into Article 4, already is an Article 4? And if it is an Article 4, how can you still navigate the marketplace if you're wanting to still do deals in Article 4 area? And obviously if you're going into a market where there's no Article 4, then happy days, you can still obviously go and buy the house and convert without going through planning. But again, like I was saying at the beginning, for things to work in your favor, you've got to learn how to adapt. So I've always been in favor of going through planning. All my properties have always had planning to be converted into sui generis, just again to allow me to maximize my returns on these properties. And I think it just mitigates these downtimes, right? People that aren't maybe skill set wise familiar with how to go through planning, to get the extra person in the house or extra rooms in the property to make it more profitable, to allow you to have even more margin in your deals to accommodate for high interest rates and even bills increasing in the marketplace. So these are skill sets you want to acquire and learn how to navigate in times like this. And obviously if you're smart enough and you were able to obviously learn the skills before this happened, then amazing, you haven't got to worry about this. But if you're coming into the market, obviously you're coming into this space, you've got to be aware that it's no longer as simple as just buying a house, converting a house and hope to make some money. You still make some money, but you again want to learn how to protect the downside. And for me, that added skill of being able to go through planning, going from taking the house from a C4 use class, i.e. a small HMO, to a sui generis of 7, 8, 9, 10 bed HMO, and mitigate you having less profit from your HMO deals. So I will say this, the game has changed, but it hasn't ended. It's harder for amateurs, so people that don't know what they're doing, thinking they can just get into the marketplace. I think this is kind of great because it's setting the great people apart from the people that are amateurs. So only the professional people who know what they're doing are seeing the benefits and having these strict measures in place to weed out all the noise of people that are wanting to get into the marketplace who don't necessarily know what they're doing. So in terms of HMO as a strategy, we can still tell that it's still something that provides us income far above and beyond what buy-to-let will do. We know buy-to-lets are still struggling in terms of high interest rate periods, because some landlords are selling their buy-to-let portfolios because they're now not making any money because their mortgages are higher than their rental income that they're receiving from their properties, and it no longer makes sense for them to hold on to the asset. So what they're trying to do is release some of the equity from the property. So the benefit is there. Obviously, you've held the property for 10, 15 years, you enjoyed your time of making money from your property, you're now looking to sell your asset and get some equity back out and maybe reposition your capital, maybe even from a buy-to-let into a HMO to allow you to see further capital appreciation and also get higher income from your property. So this is happening in the marketplace in terms of buy-to-let versus HMOs, but HMOs are still holding strong in terms of profit. So you're still seeing £1,000 plus in profit, which is still a good return on your money. I'll say a great return compared to your buy-to-lets if you're comparing those two strategies together. So like I was saying before, the way you're going to navigate this market is having that skill set of being able to handle planning and going through the trouble of potentially going through sui generis applications to allow the property to be enhanced even further through conversions, to have larger HMO properties, which then provide you higher income from these properties as well. I'll also add that in this current market, obviously we do these type of deals because we've got high interest rates and also high bills at the moment. You do want to be more strict with your numbers to make sure that these deals are going to provide you income. But again, not too strict that you're paralyzing yourself from actually doing any deals in this marketplace, because again, the tables will turn around at some point. And so you want to make sure you've still got into an asset that performs and still makes sense, obviously. But like I said, for most people, you're going to see a healthy return still from a HMO, just due to the margins that the deal provides and having these larger HMOs as well. So look, if you're wanting help with your HMO portfolio and you want to build a high cash flow property portfolio, there's a link in the description for you to book a call with myself and the team to see how I can work with yourself one-to-one to help you build out this portfolio. So what I would say is you need to at least have 20 to 30,000 pounds, and if that's you, book in the call and let's talk about how we can be of help to yourself. So if your HMOs are failing, the likelihood is you haven't considered these few things. You haven't understood the refurb costs, so you've underestimated refurb costs to convert these HMOs. Refurb costs are, again, something that's changed of late. There have been a higher increase in refurb costs of converting a house into a HMO. So if you're coming in, you're buying an asset thinking I'm going to spend this much money on the refurb, maybe your end valuations haven't come out the way you want it to be. And again, that is what's making it maybe tough for you to see a return on your HMOs. But again, the knowledge of how to do this isn't understood and you're doing it in a way which isn't providing you the returns you thought you could receive from these type of properties. Again, simple things like picking the right location, very, very critical to seeing an asset that actually performs. If you're buying on streets that aren't performing with no qualified tenant demand, and again, you're buying a house because you like the idea of having 6 rooms, it's not just about buying a house on the street and converting it to 6 rooms because it has a space. It's about finding a qualified demand for a property on that street that tenants actually want to live in and want to pay the rents you want to see from that property. And therefore, as a business model, that makes sense for you to invest into, to see the return and get that ROI for the money you've invested into that property to create that product. So these are the nuances around still making this work in today's market. Again, you might be someone going into the marketplace not fully understanding what article directions are in place and maybe thinking you can go in the area and buy a house and look to convert to HMO and very quickly realize you've made a horrible mistake of buying this house, not knowing that you can't convert this house, and maybe there might be a struggle with getting the planning in place for this HMO. It is possible to navigate the whole article direction in terms of still getting HMOs approved in those article areas, but you need to know what you're doing and understand the nuances around each council and what they're expecting and still accepting, if they are still accepting any further HMOs in those areas. And again, for the unexperienced landlords that might be struggling to see HMOs work, it could be down to the fact that, again, the type of rooms they're putting into the marketplace, these cramped rooms, small rooms, aren't serving them well in a tough market where maybe there's supply of HMO rooms, good quality HMO rooms, where tenants are like, well, I'd rather pay the extra to go and live in a better accommodation. So you do want to make sure you're putting the right product for your marketplace. And if you're not thinking about your product market fit in terms of what tenants are expecting in that marketplace, then you are, again, going to probably see yourself struggle with HMOs. So for me, it all comes down to your know-how and your knowledge and understanding the game principally. Like, how are we even building a business? What is it that we're building? What was our competitive analysis when we were looking at this marketplace to even look to step into the marketplace? Like, what are we creating? It's not as simple as just buying a house. Like this isn't a buy-to-let game of just buying a house and put family in and it works. There's a lot more nuance to this. Like, what type of even as simple as what type of demographic of tenants am I going to get on this type of street? Because again, some streets will only drive a certain type of demographic. You might create an amazing HMO, it looks lovely, it looks amazing, but people that have the level of money that can afford that probably don't want to stay on that street because you bought on the wrong street, for example. So it's understanding this nuance around what it is you're investing into, how does it actually work as a whole. There's a lot to this, and you've got to really understand to make this strategy work for yourself. It's definitely doable, but with the right guidance and with the right support and right knowledge, more importantly, it can be achieved. So to kind of summarize, to build a sustainable portfolio like I have myself, you want to be looking at having sui generis type properties in this current market to allow you to be able to weather the storm if you are coming into this market right now. You also want to spend time on creating better design properties and also having larger HMOs in terms of having room sizes that are going to support the test of time, right? Because again, people being at home, working from home these days, wanting larger spaces, you want to make sure you're having rooms that are going to support people as the requirement for room space is getting more and more. And people wanting to stay home and feel like this is a place they can live in. And also having that added angle and unique angle of adding a personal brand. So this could be you leverage your personal brand to raise capital to scale, or even getting deal flow from agents, people who are in your network, see you doing amazing things in your investment area, or even having the additional angle of having a branded HMO where you're branding your HMOs to have this brand which people recognize in the investment area you're in, and again creates this brand that this is the type of property that you get for renting a property off this brand. So again, these are different angles to again stand out in the marketplace, have a unique selling point. So these are angles to consider to be able to set yourself apart from the amateurs who are doing this game of trying to get into HMO. So look, if you want to get into HMOs, what I would definitely advise is to get educated, take this seriously. It can be very rewarding, but it's only rewarding for the people that are educated and know what they're doing and know how to navigate this current market that we're in. And more importantly, know how to adapt and build a sustainable portfolio for the future and not just for today. I always say it's easy to make money in today's market. Some argue that it's hard to make money in today's market in terms of challenge, but it's the easiest it will be to make money today, right? But can you keep making money in 5-10 years time to come from that same asset? That's how you set yourself apart from everybody else in the marketplace, because everyone doesn't think long term. People are thinking very short-sighted, like, okay, I want to get some money now. I'm building an asset to make money now. But you build an asset, I would like to think anyways, to keep providing you income for the years to come while you wait for it to appreciate in value. So we're gonna make sure you're creating something that's accommodating for the future and not just for today's market. So that's the biggest thing I can give you on this, and hopefully you got some value out of this, and I shall see you in the next video.